The busiest week of earnings season is upon us. We want to bring in Stephanie Link for this. Steph, it's not just earnings season. Man, we've got this potential trade deal that looks like it's a much better situation. We have the markets at new highs. We've got the futures up sharply this morning. Kind of on a roll here. Does that make you feel good, or do you get nervous when things are this good?
Oh, I feel really good, Becky, and thanks for having me. Good morning. The economy is hanging in there, more than hanging in there. It's running at 3.9%, according to the Atlanta Fed tracker. The Fed is about to really embark on more easings ahead, and we have that this week, of course. And Fed Powell actually also hinted that maybe they would even go in December. So I feel good about that. And then it's all about earnings, right? Earnings are actually much better than expected. And I was thinking we would see 10 to 12% in earnings growth. So far, we're at 15%, wow, with revenues growing 8% and margins expanding. So it is a really good environment. And again, it all has to do with the economy is doing well. And one thing we've learned from the management teams on all these conference calls is they're feeling better. They know the tax bill. They know a little bit more about tariffs, and they're dealing with the tariffs. A little bit better than expected, by the way. PMIs are in expansion mode, so they're spending more. They feel better. And I think they sound a lot better on the call so far than last quarter, certainly.
Last week, it was all about the banks, and we did see the banking index, or the banking ETF. I think it was up by better than 3%, even though the major averages were up by closer to 1%. Outperformance in those banks. This week, you've got a lot of the tech names, Microsoft, Google, and Meta, all reporting on Wednesday. And some of the industrials, too, like Boeing. So what do you do ahead of those numbers coming out for any of those?
Well, I own quite a few of them. I think with regards to the banks, on any weakness, you want to be buying. And I'm really excited about this H-band buying cadence this morning. That just shows the confidence that these banks have now, and the fact that the deregulation is happening in terms of being allowing companies to do some more M&A. In fact, H-band has done 2 acquisitions in 4 months, so that's kind of cool. So on any weakness, I want to be buying the banks. And then in terms of this week, I own Meta. I don't own Microsoft and Alphabet. I think with Meta, to me, it's trading at 21 times forward estimates, and you're getting 22% revenue growth and operating margin expansion. Remember last quarter, Meta had 500 basis points of operating margin expansion. I don't know if we're going to see that this go round. But I do think that the company has gotten much more disciplined in terms of the expenses. So that'll be that. In terms of Microsoft and Alphabet, we got to see cloud revenues stay strong. So last quarter, right, Microsoft had Azure about 40%, and Alphabet had about 32% in their cloud business. So can it stay that strong? And I think it probably will. So on any weakness, I think you want to be buying it. We're just not getting the weakness that much.
Back in January, you named Boeing your favorite idea for the year. Again, they're reporting this week. How's that stock done since January? Somebody show me a chart year to date.
I think it's up about 20%.
There you go, 26. So. 26%.
26. Yeah. It's done nicely. I was hoping it would do even better. I think it will do better. It's really all about the 737 MAX and the production. And we know that the FAA gave them approval to increase the 737 MAX production to 42 a month from 38. Why is that important? It's important because eventually when they deliver these planes, that means they get more free cash flow. And I think that the free cash flow estimates, it's for negative $400 million this quarter. I think they're going to easily beat it. And I think over time, over the next several years, you can get to something like $10 billion in free cash flow. And that is what this company trades on. New management, and they're not even new anymore. They've been there for about a year, but really good management, proven track record, good execution. It has never been a demand problem for Boeing. It has been an execution problem, a safety problem. And I think that management team is actually fixing it.